This episode is sponsored by LitVM, Litecoin's virtual machine. LitVM enables smart contract capabilities in Web3 applications for Litecoin. Designed for builders, LitVM features a modular ZK stack that operates on top of Litecoin and is powered by industry leaders such as Bitcoin OS, Arbitrum, Espresso, Succinct, and Caldera. Together with all the other builders in the ecosystem, LitVM is advancing the Litecoin Meta. Visit litvm.com. When it comes to mining, pools matter. This is why we recommend POWERPOOL. POWERPOOL is a mining pool built by miners to maximize profits. If you're mining from home or have a larger scaled operation, use POWERPOOL for the best payouts. POWERPOOL supports SHA-256, X11, Blake 2S, Eaglesong, K-Heavy Hash, and of course our favorite, S-CRYPT for Litecoin, Dogecoin, Bellscoin, and others. Mining with POWERPOOL is easy with its simple user interface, and the platform has all the reporting exports that you're looking for. POWERPOOL typically charges a 1% fee, but if you use the 84 million link in the show notes, you will pay less than 1%, which is excellent. So sign up, point your machines, and start mining with POWERPOOL for lower fees and better payouts. Cheers, happy mining. Hello and welcome to the 84 Million podcast. We are on episode number 54 with Earned Not Gifted, and we welcome him back to the show. Let me give him an introduction. Earned Not Gifted is a prolific market analyst and contrarian thinker with profound originality. He publishes the Seeking Truth in Markets blog at Medium and has gained notoriety for his live streams on YouTube and X. Today, he rejoins the podcast to discuss his latest work, a 297-page book, which I gratefully read, at least in part, entitled The Second Bitcoin from Mania to Valuation to Parallel Systems. Of course, he's on X at Earn Not Gifted. Welcome to the show, sir. Glad to have you.
Yeah, thanks, Kyle. It's always nice. I like doing these, and this topic's more interesting to me. I know last time we talked quite a bit about price action, and this has to do with that, but these are kind of the ideas that I've thought about for the last decade, I guess, since 2016.
It seems, and I look forward to unpack that. I didn't review our last episode, but I believe it was over a year ago. It was near the end of 2024, I think.
Yeah, it's been a while, for sure.
Been a while. But you've been busy, not only writing books, but doing streams and creating like songs and media and all sorts of stuff. So we've been watching you.
Oh yeah, and I know all the stuff that I've released, it was just kind of testing to see what would work and what wouldn't, but I've been building towards a larger system, like multimedia system as part of this project. The book is one component that I'll be launching here in the next few weeks. It'll be confusing until people see it in total, and then I think people will recognize that I wasn't just releasing random stuff for fun.
Can you give us the broader view of what you're doing before we dive into the book?
Yeah. So partly the book, I'll just brief overview. It's a framework. It's less of like a novel type of book. It's more of what I think would be useful, or when I entered the space, what would be helpful for me. So more like a map or orientation manual for how to think about these things with specific invalidations of the idea throughout. So it kind of builds a chapter logic chain from 1 through chapter 31. And as long as each chapter's logic holds, then the conclusions will follow. So I wanted to have a framework reference text, but all of the music and videos I'm building to exist inside this world that I've created. It's really like a 3D environment with the character that I've built. Kind of represents me, but it'll be mapped to my real movements, my real facial expressions and speaking. So I'll be speaking through the avatar inside my rendered New York City apartment. It's kind of maps the same apartment that I live in, with dashboards and my screen share. And the music corresponds most of it to the ideas or the themes of each chapter. There's some extra stuff too that's unrelated, but yeah, it's designed to be one living, breathing kind of thesis engine, and I built it because I think the audience, especially in this era that we live in, is less likely to just read a book on its own. And I think, people, especially in environments where there's a lot of volatility and things are changing, people are more likely to want to look at someone live explaining it. And then maybe if they're interested, they can go and reference the book for the actual, deep dive. So that's probably a bad explanation, but the avatar and 3D environment aligns with the future that I think we're heading into. I talk about pseudonymity in my book quite a bit, building persistent identities in order to have parallel systems actually function. And we can talk about that. I don't want to say too much, but basically it's just it's a living world for my thesis to exist in.
Very cool. We look forward to seeing it as it is revealed to us. I've liked the music. It's kind of chill. Just your whole kind of vibe is sort of chill. I think I said that last time, but I still believe in it. So I like your approach to all this, and I am grateful to have read the book. I got like a chapter or a few chapters, and then you sent me the whole thing, which is very generous of you. So I'm honored. I'll probably print it out just to have it, more than a few pages, but I do look forward to an actual printed one. You're going to plan to print one.
Yeah, I published it on Amazon, and it'll be on my website, the audiobook and the ebook version, because I don't have my own, I think Amazon's KDP publishing is easiest for self-published authors.
Yeah.
I'm going through them for the printed book, but my audiobook and ebook will be for sale directly on the site. And yeah, it should be up within 72 hours. I published it on Amazon 2 days ago, so
Very
by
cool.
next week, I'd assume it should be ready.
And I'll add it to the show notes as well. It's a great book from what I read. I didn't read the whole thing before the show, before we were live. I mentioned to me, it's a book that I feel like I'm going to read and then reread to kind of digest it. You have a lot in there. The format is unique, and I think the way you laid it out does make sense with your sort of preamble here, with how it's going to connect to the other media you're going to release. So it's really interesting. I think it's historically informative. It's very methodical. One thing leads to one thing. It's just very linear, if that makes sense. Mm-hmm. So I think you've organized it really, really well. It's definitely a unique take on Litecoin and Bitcoin, which we're going to get into that. But before we do, and we sort of touched on this, but we're in an age, or an era of continuous partial attention. Attention spans are basically shot, yet you're writing a long-form book of 297 pages, which, by the way, I'm a big fan of. But why? Why did you take this approach in this environment?
Yeah, that's a good question. So we partly covered it, but there's multiple reasons. One of the reasons is I had been writing long-form articles, long-form email responses, long-form text messages to a lot of people asking me my thoughts, and there was no one place that I could direct them to that would share my full thesis. So I was repeating myself, over and over again. That was one of the reasons that I wanted to lay all of this out in a structured way, to have a reference text that I could just send to people if they were interested. And I think the community doesn't really have any source material for a thesis around Litecoin that's more comprehensive, explanatory. Right? There are books that exist, and even in the Bitcoin world, there's a lot of books that exist, but a lot of them are, surface level, beginner oriented books. Mine has a lot more depth and explains the full the full idea from first principles. So like what exactly it is, what the value proposition is, what the market it competes in is, where I think the emerging demand is going to come from. So I wanted to have a reference text for people to be able to send uh in case they were interested in Litecoin, and there's just no market uh out there. There was no book out there that you could read that correctly describes the unique position that it's in. And even the institutional stuff that I would see from Fidelity and all of their reports, I felt were so elementary
Yeah.
and uninteresting. And there's not a market for it today, but I think there will be eventually if these markets do grow like I think they will.
It's a good thing. I'm personally excited for the book. You are correct. I think this absolutely is the most thorough Litecoin book that we have to date. We did have eCurrency Hodler on this episode. I will link him in the show notes. He did the first published work through the foundation on Litecoin, but I mean, we're talking, pretty thin, important, but pretty thin. And it's more like a manual on like how to use Litecoin, and how it works, and just sort of that. It doesn't get into economics. It doesn't get into the other things that you discuss in your work. Of course, Vlad wrote a great magazine devoted to Litecoin, and we were able to participate with him in that with an 84 million version. That's super cool. So we do have some. There's a very small canon, if you will, but I think yours is absolutely going to be the most thorough. And I think it's just extremely important because, again, there are a lot of books on Bitcoin, ditto podcast streams, etc. I mean, everything has attracted kind of mind share towards that, but some of us see Litecoin differently. And I think we're in the early stages of gathering that sort of, I would say, following that impulse for our own reasons. And I think it's important, and I think you're a forerunner. So
thank you. Yeah, I wanted
I think it's
people to
great.
be able to take it more seriously, right? The social
Yep.
like layer around Litecoin and the narratives that exist that are popular, I think are very wrong, and nobody has like pushed back with an actually serious like intellectual framework that can change that like cultural default response of just thinking it's useless. I mean, even at the institutional level, they're like that. But if it succeeds, and if Litecoin price moves up, then I think a lot of these things will be validated and people can take them seriously. Take the idea seriously.
Yeah, and even speaking of the institution, some of it just seems like copy paste. They're calling Litecoin a fork and everything else, and we've addressed these in the community, but it's just kind of ridiculous to read some of the things that these institutions are writing. Some of them have it right, but some of them have it kind of right. And so yes, this is important. Let's kind of go in to the meat. I'll start from the top. Okay. So basically, about the author, and I'm going to read this from about the author. It says, "This book names the mania you're in, shows the pattern behind it, strips out the narratives hijacking your judgment, defines what money is, maps what crypto competes with, sizes the opportunity, and lays out plausible paths forward without asking you to, quote, believe anything. The only authority that matters is whether the mechanism holds up under stress." So no credentials, no boasting, straight to the point, and a nod towards judging your words or the language itself. So why the emphasis here, and why have you chosen to remain anonymous and rather than going public with this piece?
Yeah, so there are multiple reasons, again, for this too. One, it aligns well with the future that I'm heading into, and I briefly touched on this. I think pseudonymous continuous identities will be important for economic participation into the more further distant future, so like 5, 10, 15 years. Two, I want the work not to be about me, just about the ideas themselves, so people can attack identities easily. Right? They can say, "Oh, who is this guy? He's has this past. Why does he know anything about this?" I didn't want it to be about identity, or if it's in a positive light too, like, "Oh, this guy's accomplished all of these things. He must know what he's talking about." I just want it to be about the framework and the the logical chain that I'm building throughout the book itself, rather than about me as a person, as my physical person.
It's interesting. And like I said, you were anonymous last time you joined the show. You remain anonymous. I think some of us want to meet you. We've spoken.
Yeah.
We know voice maps, but we haven't seen anything else. And this is interesting. And I think you're sort of exercising something that was once more omnipresent than it is now.
Yeah. I mean, with pen names, people used to write anonymously all the time because
Mm-hmm.
there was risk to their personal selves for things they wanted to express. And I think that's part of the reason too. I do think it can be more dangerous into the future as governments have financing problems. It can be increasingly, so it already is. I mean, you're seeing it around, right? Like you can get fired for your job for saying something on social media. So we've seen it. That's less of my personal reason, but I think for other people, pseudonymity will be important for those reasons, right? Have a separate profile for what you want to say, your opinions, and then have your face showing profile for everything that you know is safe to say.
Your book is broken into parts, acts, if I'm correct. Act 1, Act 2, and then a third act, I believe.
Mm-hmm.
We'll cover Act 1 in part. Like I said, it's a long book. We're not going to cover it, but we can at least remind people of why they need to read it. But the first portion talks about mania, which is also referenced in the title of the book itself. So what is the mania or manias? How would you describe those? And I think it's in the setting of Bitcoin initially.
Mm-hmm.
And what are their consequences on the market?
Yeah. So first, in terms of structuring this, originally I wrote it kind of similar to a lot of the monetary textbooks you see from past to present to future. But I felt like I wanted to meet the reader in the environment that I thought we were going to head into eventually, and still do, where there's high volatility. People enter through this emotional response. They might feel directly implicated in price moves, feel this FOMO. So I wanted to meet the reader in the expected environment of a mania, to diagnose their psychological response and help them understand, not to outsource their thinking. If I could help them see themselves like a reflection of what they're feeling, diagnose it, and give them a framework for their own psychology, maybe they'd read towards the second act and then understand, from a first principles perspective, what this is, and not get sucked into the crowd where they'd make irresponsible decisions. But in terms of defining mania, I wanted to write this because most books, and all of the ones that I've referenced and looked at in the past, the popular books on financial manias, they describe them as this excessive greed, animal spirits, kind of like max delusion of crowds. But that to me is inaccurate description for what it actually feels like in the moment. I don't think people rationally understand they're not just buying into meme coins to get rich. A lot of the time, mania is due to a real structural, like, migratory change where people are adopting new systems versus old ones, and they feel like they have to participate. So I wanted to break down historical manias, like the real durable ones, in which there was actually long-term change that resulted in re-coordination around a different technology or a different monetary asset, and show the process of what happens before kind of the FOMO and forced participation that we see at the end stage of a mania that is always talked about and referenced as, max delusion or greed. So I wanted to help people see the historical pattern of manias, define each step, and then be able to locate, hopefully, at least decently well, where they're at currently so that they can make smart decisions. We can break down those steps if you want to, but that's kind of a overview of why I structured it that way and how my book is defines mania, a totally different way, more as a rational human response rather than irrational delusion.
Interesting. Yes. Yes, we absolutely can. I'm remembering you wrote a narrative or story driven mania versus a migration mania. Maybe if you want to talk about that.
Yeah, for sure. Often in crypto, what we've seen is continuation rallies where narratives they already exist, but then speculative capital aligns behind them to push the story further. So the best example that everyone's familiar with is Bitcoin. And I break down in the book later on how from 2009 to 2017, it was primarily a migration-led mania that eventually developed a narrative that then allowed capital to come behind it and push it into that blow off at the end of 2017. But post 2017, we've just been in story-driven world where we haven't seen really much increase in underlying monetary demand. We've just seen, institutions, larger capital position behind this story. And the reason I'm trying to make a distinction between these two kinds is to help people navigate and determine whether they're just participating in a story-driven mania, which will eventually collapse, most likely, once the social coordination layer fails, versus what's more durable, right? In a durable migration type mania, we could use the dot-com bubble as an example. That was an example of real economic recoordination around the internet and companies that were built on top of the internet. The timing was a bit off. People got too excited early, but over time, over the next few decades after 2000, the top internet companies did go on to make orders of magnitude returns beyond the peak of what they topped at in 2000 versus a story-driven mania where it's just like a meme coin where it peaks once and then it's basically goes to a terminal value of 0. So I wanted to define the two differences because I think we are heading into a larger migration into parallel systems over the next 10, 20 years. And so there are durable trends that I think will persist and lead to opportunity if you can spot them early.
Story-driven mania, it seems, would be where Bitcoin is now.
Yeah.
However, it would have started, the initial entrance or adoption of Bitcoin by individuals, later larger entities, now we have ETFs and governments, everybody talking about it, but it started with individuals believing in this. The migration was first, and then the story came. Is this correct?
Yeah, that's what I mean. So early on, Bitcoin evolved with no story attached originally. It was just a group of cryptographers and then an early use case on Silk Road and websites where you saw substitution from fiat monies like the dollar to Bitcoin because they needed the Bitcoin to do things they couldn't do with dollars or another fiat money. And that drove price. Speculators noticed and started participating. But yeah, early on in Bitcoin, that is what drove price. That's why when it collapsed, it didn't go to 0. There was still durable monetary demand underneath. Versus today, it's mostly speculation and confidence.
And it wasn't popular to be a Bitcoiner in early days. You address that as well. In fact, it may have actually been a risk.
Yeah, it was very socially risky. I mean, every institution, every article was about how it was for criminals and doing bad things. It was socially like very uncool to talk about. I remember early on, like my parents getting really mad at me for buying Bitcoin, even in 2016. But now you talk to the same people and they're like, "Oh yeah, I know what Bitcoin is. It seems fine." Everyone else, it passed that social permission threshold where it's safe to talk about, and even popular. But Litecoin exists. I don't know if you want to talk about this, but it's kind of, it's socially risky to talk about that today.
So there's parallels, and I think we're going to get into more of these parallels. as we move through Act 1, as I said. This is sort of an aside. You entered this space looking at Bitcoin.
Mm-hmm.
Describe your thoughts on Bitcoin, what it was when you entered versus what it's become now, just so we can establish that.
Mm-hmm. Well, it's basically the same. The only thing that's really changed is the social layer on top of it. Sure, like mining infrastructure is centralized. A lot of the coins and like wallet providers are centralized. We've seen a less peer-to-peer market share. But I think the technology itself hasn't changed much, and that's why I was trying to separate the social layer from the economic layer. But it really what's changed is participation on the social layer and narrative versus the underlying blockchain. It's mostly unchanged. There's been a few tiny upgrades or changes, but it still works the same as it did 5-10 years ago, practically. The only difference to me is what people say about it and what they think it is or perceive it to be.
Do you see it as a durable digital asset going forward?
I think it can be. It's just, I think speculation brings on risk. I think the more you pump up the price and centralize mining infrastructure because of the economies of scale, you're building a threat to the decentralized environment. It makes it easier if Bitcoin does start to succeed through monetary adoption and governments might not like it. It makes it easier for them to cut off choke points and blacklist certain addresses or take away Bitcoin's core value proposition of censorship resistance and inflation resistance.
In your book, you do talk about narrative. You mentioned it a few moments ago. I know that that's a big buzzword, and it's entered even the Litecoin community and space, and we've had bigger names question the narrative of Litecoin and things like this over the past 2 years. And I think we've also sort of pushed back on that too, because I've argued on this podcast that we do have a number of narratives from day one and things that have evolved over time with different developments or improvements to the chain, like MWeb, for example. But I do think it's important to discuss the role of narrative.
Mm-hmm.
In the book, you focus on kind of late market narratives and also like narratives being a misplaced focus. Can you just tell us what the role of narratives are in what you outline in the book?
Yeah, I was trying to. Well, most people view narratives as like late. Most market participants view them, or at least the ones that succeed decently well, view narratives as kind of late. Like once a narrative arrives, it's late if you want to start participating. You should be looking ahead. But I don't think narratives are useless. What I'm trying to show in the book is that you can start to spot strain in the dominant narratives, and the most asymmetric financial opportunities are positioning while those narratives are strained or overheated or socially crowded. Because what comes next, if the underlying functional layer allows for migration, can lead to rapid repricing. So I'm trying to teach people how to spot the fracture points in narratives and determine whether that social coordination around the dominant narrative is straining and can fracture. That's the role of the way I look at narratives. And then also for assets that don't have a popular narrative where people are coordinating around it yet, those are the ones that have opportunity. You're not going to find much like giant upside asymmetric risk return profiles if everyone already agrees with you. You need to be able to see the narrative and understand the functional layer what the thing is and how that will eventually lead to social coordination and capital aligning behind a news story.
What is the apology phase? I thought that was neat when you sort of outlined that. I'd love for you to discuss it. And again, this pertains, I believe, we're still in Act 1, we're talking about the first Bitcoin before the second Bitcoin. So what is the apology phase? What does it look like? And how does it pertain to Bitcoin?
Yeah, so in chapter 3 in the Mania sequence, I broke it down into 7 steps, how this Mania, how it evolves eventually into step 7, which is forced participation, and the thing everyone understands is Mania. But in chapter 4, I wanted to show what it feels like between, I think it's steps 3 and 4, right before price moves without a narrative. Right? When a dominant narrative is strained or stressed, you can start to see it apologizing for itself, right? It's big box, like retail did this, and when the internet companies started to win sales, you started to see them reclassify shopping as an experience. So I listed that example in the book. Instead of, this is the cheapest cost for value type thing, which they originally won on. You start to see metric dismissal. So you saw that when streaming started to become popular, right? People on legacy media would say, oh, those numbers are distorted, they're irrelevant. You just see total dismissal of the metrics. These are two aspects of which you can determine whether a dominant narrative is in strain and in that apology phase. And then I compare it to Bitcoin maximalism today, where the social coordination layer is kind of breaking. You're at such an extreme price point, so above the monetary demand levels. And if that's starting to fracture, and you can spot it with, I think there's, a ton of evidence that points to that, where they move the goalpost. They say P2P cash isn't the point anymore, when that's, get higher point. You start to see them saying like network activity doesn't matter, right? Like early on, they were all those early on chain guys were all looking at network growth, monetary growth. That was the story from like 2013 to 2017. Right. That's the whole reason they had the Bitcoin scaling debates, and everyone was so worried about how is Bitcoin going to scale, right? Because they both wanted the price to go up.
Right.
But then it just became like non-existent. Nobody talks about it anymore. They say it doesn't matter. So all of these, the apology phase, I just came up with that terminology and tried to give language to the current phase that Bitcoin's in, and then show it how it existed before previous major breaks in social coordination around other dominant narratives where industries had a huge lead and then eventually lost to competitors. So I'm building the chain, showing you how you can spot the dominant narrative fracture potential in Bitcoin maximalism, and then eventually lead you into seeing the on-chain metrics and what actually has a chance to compete with BTC. So that's why I listed it in the book there. But I don't know if anyone's ever talked about or given language to that specific idea of the narrative apologizing for itself, right? It's less of it doesn't look that confident, right? When you're spending all your time online trying to defend a narrative, saying it doesn't have to do the thing it originally was supposed to do anymore. That to me signals weakness. But for some reason, I don't think the public sees it that way.
Yeah, I think it's definitely an appropriate label that you assign to this. P2P cash, you mentioned this, isn't the point anymore. We hear this all the time. Holding is the use. In other words, you don't need to use it. The metric is noisy, whichever one you're bringing up. Network activity isn't relevant. It's still early. The big users are coming. Okay, some truth to this. If you question this, you don't get it. You're biased. You're emotional. So basically, yeah, the things that they built their castle with, the foundations, they're abandoning. And it's interesting. Yeah. We can look. I'll just look. There was a stat shared the other day, just with the active addresses between Litecoin and Bitcoin, and it looks like that flattening happened 18 months ago, unless that site is wrong.
Yeah, I'm not sure. I haven't looked into it. I did see
it was from BitInfo charts, Bitcoin Litecoin active addresses historical chart. If you look at it, 18 months ago, Litecoin's been steady, and Bitcoin dropped below it and it's been below it the whole time.
Yeah, and if you look at transaction distribution among the two chains, it's pretty similar. Litecoin's actually ahead in median transaction values now, mainly because of like ordinals and runes minting from BTC. But yeah, like I talk about this in the book too. If Bitcoin was being monetized at higher value ranges, you'd see the full distribution curve rising. That would be evidence. Instead, we see distribution about the same as it was when it was first launched. We just see an like this tail denominated mean where it's like dragging up the averages from huge ETF flows and large speculators like Michael Saylor moving around coins. That's not a healthy economy, right? It's like it's definitely not. It poses risk to downside. Whereas Litecoin, it's at a much smaller market cap, right? It's 4 billion versus Bitcoin's 1.52 trillion. Yet it has a healthier looking distribution, about 50% of the daily users and transactions. So it's, to me, a lot less risky than Bitcoin here.
I have a section from your book I want to read here. It says, and I think it's related to what we're talking about, as assumptions near their breaking point, the dominant story shifts into an apology phase, again, what we've been discussing, while private optionality grows. Small marginal reallocations can trigger narrative-less price moves. We're now inside the pre-break window, a phase that repeats across markets. By pre-break window, I mean the period in between assumptions breaking and price moves without a narrative, as described in the previous chapter. Initially, you'll see the public language staying loyal to the old story while private behavior begins routing around it. The dominant voices of the incumbent, Bitcoin in this case, will begin apologizing. That language shift is one of the clearest real-time signals that you can observe at scale, and it tells you where to look next. So I guess my question would be, there's the old story, and then there's this new private behavior. I'm viewing that, seeing that we've specified Litecoin, as the old language or the old stories, Bitcoin, 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 especially Bitcoin only. That would be the loudest variety, versus private behavior, which, again, I just sort of referred to. Active addresses for 18 months, more have been on Litecoin. You just shared some metrics that it's more distributed on Litecoin, some of these stats we look at. So is that what you're referring to in that section?
Yeah, like in the Mania sequence, this is where the public social layer hasn't updated yet.
Mm-hmm.
They're still inside this old story of Bitcoin maximalism. They're looking at all the people that are holding the microphone, which were the people who ruled this past 10-year regime, which have huge positions in Bitcoin and want to promote that story.
That is,
but you're seeing the underlying
10 years, 2017, it's 2026.
So long. But you're seeing private optionality grow, right? Litecoin was at 2,000 transactions a day early 2017, and now it's at 200, and it's grown for this specific reason that I've outlined in the book. And that should persist as long as demand for permissionless markets exist. And eventually, if that, in chapter 10, I talk about where permissionless monetary demand will come from, most likely, lowest friction path. And if that persists, Litecoin should keep moving higher on a relative basis. And eventually that social layer is going to be forced to update. And you'll see signs of, people who held the microphone for the last 10 years try to retain their credibility and reputation through this transition phase by softening their language. I forgot your exact question, but that is the private optionality that we're seeing right now because we're paying attention to it, but the 99.9% of the people aren't, right? Like, nobody's paying attention to these metrics, really.
Yeah, I think that was a good answer. I'd basically just ask you to say, what is the private behavior? In the context of the book, I'm saying the private behavior or the unspoken behavior, but the behavior that's actually occurring and readable or discoverable.
Yeah,
people are using. What are people using? Are people using Bitcoin to a degree? Yes, but not like it was used once. But there is an alternate that is being used. It just doesn't have that dollar sign attached to it yet. So, no, I think that was a good answer. Go ahead.
It's funny to me because Actually, Litecoin was more popular in 2017. A lot of other altcoins were, even in 2013 when they first, Litecoin was 2011, but there were a lot of competing Bitcoin chains back then. And people were more open to the idea back then, even through to 2017. But the narrative for Bitcoin Maximum has grown so much louder,
Yes.
despite the competition growing so much more relevant, right? It's like 2 orders of magnitude difference. That just shows you the level of divergence there, and potential repricing if these markets do grow to what I'm alluding to in the book.
So how long does this apology phase last? You mentioned we're knocking on 10 years. And what is on the other side?
Well, price grants permission in markets in other areas of life, right? Like music or creative aspects, it has to cross some permission threshold, right? Enough people have to say this is good before it becomes socially permittable to talk about. But in markets, it arrives through price. So if Litecoin is the dominant competitor, which it is by all the metrics you can look at, as soon as price on a relative basis against Bitcoin breaks out or against the USD breaks out enough, that's when you'll start to see this transition out of apology phase into the new story. And what I think you'll see is what I talked about before. Public people that have been holding the microphone of Bitcoin only will start saying things like, oh, I always liked Litecoin. It's always been a fair thing. I said that like 10 years ago. They'll try to soften their public stance on Bitcoin only, pretending they never said or aligned with Bitcoin maximalism. You already see this with some people like Peter McCormick and others who are starting to distance themselves. This happens in politics too, but we're watching it, slowly change. People are distancing themselves from Michael Saylor now, much more so than they were in 2021 or even 2024, 2025, right? He was kind of a hero. And now it's more socially popular to critique him. But yeah, I think this possibly ongoing, and eventually you'll notice a shift once enough people shift away from Bitcoin maximalism. I do think it's inevitable under the assumption that the permissionless monetary markets grow from very niche today to moderately successful.
And if we look at sort of the figureheads of Bitcoin maximalism, Saylor, Max Kaiser, others, Peter McCormick, interestingly, and I'm not calling him a maximalist. I mean, he's definitely a Bitcoiner, but and he may be a maximalist. I don't follow him close enough to know his language over time. But I mean, he sat with Charlie in 2024 and did a fireside chat with him and said basically, yeah, Bitcoiners use Litecoin a lot, and he emphasized that. So I think some people are honest enough, even in the Bitcoin space. And I think historically Bitcoiners and Litecoiners work together quite well. And even the ones of the maximalist camp, like Saylor, there is audio of him, whether it was with John Kim, which was sort of tongue-in-cheek, but still a statement of general positivity. And I think there was one when he was on a Spaces talking about someone may file for commodity status for Litecoin or something. He's acknowledged Litecoin. And I think their big thing was I haven't seen, even with Kaiser, who used to tweet about Litecoin and do YouTube videos about Litecoin, they just ignore it. They don't disparage it or say it's a shitcoin. Sometimes they may, but they just omit. And maybe that's strategic because they know what's coming. And also, and this has been my take the whole time, how do you malign a coin that is a near carbon copy? You're basically attacking your own project.
For sure.
Which doesn't make any sense to me.
Yeah, it's weird to see. Some people will call it shitcoin. Some of the maximalists, even though it's the same. What's hardest, that's why I think the story change was so likely, because it's the biggest threat, and I think that's why they admit it. It's not doing anything really materially different. It's the same security model of Bitcoin. And if BTC was so holy or so would outcompete everything else, you would see LDC transaction activity dwindle towards zero. But if it's the opposite and it surpasses Bitcoin and daily users, which it's not that far now. And there's no public defense. I think the only thing you can do is just not talk about it.
And it allows them to have basically a position where they never maligned it per se, which should they want to accommodate and adopt, they could.
Yeah, I'm sure.
And they will. I mean, it's inevitable that they will. Right, the capitulation.
That by the top of Bitcoin will also put in the top probably for if it becomes popular. Like they're always late. The people who really made money on Bitcoin were not the institutional type. So I don't know why everyone's looking at them. They came in 2021 and then 2024, 2023. So yeah, it's an interesting thing going on with totally ignoring Litecoin despite its success.
Oh yeah. We'll go to the title of your book. We've alluded to it. Now it's the cat's out of the bag. So basically, again, in the beginning, you establish this sort of framework. And it applies to Bitcoin. The manias, the narratives, the markets, the apology, which gives rise to the second Bitcoin. So essentially, I think we already named it. The second Bitcoin is Litecoin. Some people are going to argue with that terminology. What is your defense for calling Litecoin the second Bitcoin?
My defense is, look, this was the same way Bitcoin grew, right? It was substitution from the dominant money people were using to something else because of cost. Right? The cost is infinite for them to buy the things they wanted to buy with dollars. They couldn't do it, so they needed Bitcoin. The same reason that a second Bitcoin chain would grow is because of cost. It doesn't scale, right? It's set by this consumer verification cost. Everyone needs to be able to verify the chain. You can't grow block sizes infinitely. That's the limit. I've explained this or thought about this since 2016 during the scaling debates, 2016, 2017. And I thought what was most likely is just because Bitcoin is open source, you can just have a second Bitcoin chain. You can't do that with gold. You can't do that with silver. You can't copy gold and make a new one if it becomes too expensive. But Bitcoin, it's just open source code. What really matters is monetary coordination around the asset. And so just there were a bunch of copies of Bitcoin early on that didn't actually have that big of, BTC didn't have as huge of a lead over some of these competitor networks, right? Litecoin was at 1 or 2K transactions a day early on, and Bitcoin was at 6K. That was a 3x lead, but now Litecoin has a 10x lead over almost every single proof of work competitor. It's very hard for money to achieve monetary coordination. That's kind of the barrier to entry. Almost zero chains do. That's why 99.9% of the Bitcoin clones copies went to zero. But Litecoin's achieved that, right? It's been consistent. It was available at the right time. So when Bitcoin first got expensive enough to price out people, they migrated to Litecoin. So we've seen this trial happen 3 or 4 times over the last 10 years. And Litecoin's retained that demand and kept moving its baseline higher all the way up to 200K transactions a day. And no other chain has shown that. The reason why second Bitcoin chain is justifiable is because of what we talked about before. It's the exact same security model. You're looking for permissionless settlement through this technology. The only thing Litecoin changed were arbitrary parameters, in my opinion, right? 84 million instead of 21 million, but the supply schedule or release schedule is identical. It's every 4 years. The one important change is the mining algorithm, right? So it doesn't compete with Bitcoin hash rate, but all the others like block time, maybe subjectively you can argue it's better that it's 2.5 minutes, but really the security per block at equal price and hash rate would be 1/4 for each Litecoin confirmation as a Bitcoin confirmation. So it's really it's the same value proposition. It's the same type of money. And I think a better definition than Litecoin is the second Bitcoin, because we've seen this evidence of sustained monetary coordination and increased monetary adoption over a 10-year period. I think we have enough evidence now to call it that. And I don't like I don't even like saying the word Litecoin to people that don't really know about it because the social layer is so distorted. Because you say Bitcoin to someone and it immediately brings up in their head these symbols of digital gold, digital energy, whatever the narrative salesmen are selling. And you say Litecoin and they think it's like a dead chain or irrelevant when
Do
the
you see that
reality
changing
is
though?
different. I think it will be forced to change
Absolutely.
if the permissionless monetary demand expands. Like I walk through in the book in chapter 10 and then through act 3 of how I think about this and how this market will actually develop from casino to actual monetary market. Because I think we're seeing a lot of lower friction entry points in a specific sector. I don't want to talk about it too much because it would take forever.
No problem.
But that if that demand increases, we're going to see the same conditions manifest that have led to Litecoin monetization, but it could happen on an accelerated timeline. And then, it's a matter of time, right? If you start seeing Litecoin at full blocks at 2 million transactions a day, the public's going to want to know, and they're going to listen not to the people with the microphone, but to the people who are competent, coherent, and are looking at it through the right lens.
Yeah. I think when I saw the book title, it immediately made sense, the second Bitcoin. I know you've talked about the perfect substitute ad nauseum.
Yeah.
And this is part of that thesis. So it makes sense to me to call it the second Bitcoin with a lowercase b. But one thing I can say, and I think Litecoiners know this, the world will come to know this, should all of these things play out the way you describe. But I mean, you could say, well, why isn't Bitcoin Cash the second Bitcoin? But there's so much muddy water with the Bitcoin brand beyond orange original chain Bitcoin. And I think Litecoin doesn't have any of that. It's also older than all of them, right?
Yeah.
So you had 2009 and then you had 2011. Bitcoin Cash wasn't until the fork in 2017. And all of the other, and then there's versions of versions of versions. All of them are very, very, very divisive. Now, we may end up getting to a divisive situation because not all transitions are peaceful, as you describe. But up until this time, they've been very compatible. And I think that is a very important part of Litecoin's story versus all of the other Bitcoin chains that I would say are not really Bitcoin chains.
And you bring up an important point there real quick on the Bitcoin Cash fork, right? There's this huge debate over what Bitcoin was, right? Because you have the same chain, it splits into two. You have to decide what is the real Bitcoin, and all the BCH people wanted that to be the ticker BTC because they thought that was the real Bitcoin in Satoshi's white paper. So really what determined what was the real Bitcoin was economic coordination. That's the point I'm trying to make. The market stayed to use the Bitcoin chain that didn't increase the block size, and that's what the exchanges then labeled BTC. Litecoin's doing the same thing. It's not a chain fork. It has its own Genesis block, but it's growing in monetary demand. Like the same conversation should reappear. And what is the real Bitcoin? And if Litecoin has 2 million transactions a day, higher monetary throughput, it maybe is the dominant Bitcoin chain, right? That's what ultimately the language has to follow.
So how long have you had these convictions? And how is it that the Bitcoin maximalists have not captured you? Because they've captured a lot of people.
Well, I think it's just because it's been unpopular to talk about for so long. I don't have that big of an audience, but I've had the same idea since late 2016, early 2017. I bought Bitcoin maximalism, the ethos, like very early at first, and until I tried to understand for myself. And then as soon as I started seeing those debates, I didn't agree with either conclusion. I felt like they were both trying to pump price, and they were just arguing about which would make the price go up the most, rather than being realistic about what the tech was. So it's been a long time that I've held these ideas, and I haven't really diverged from the way of thinking. I've just refined my thoughts over time, and finally felt like I needed to write the book down. So
yeah,
I'm here now.
You're consistent, and you've described this, and I borrowed your language because I believe it to be correct. we've been in a bear cycle or a bear market in Litecoin for 8 years. I mean, not a lot of people stick around for that. Yet we're seeing the metrics that are so positive, this sort of silent migration. So I see a lot of positive things on the other side. So maybe we'll look at that. What does the rotation into the second Bitcoin look like, or Litecoin? Where are we in the moment? Clearly, we had a Bitcoin market essentially half in terms of dollar price from 124,000, I believe, down to, I think the lowest I saw was 57. May go lower, I don't know. But where are we at now, and what does this rotation look like, or maybe continue to look like going forward?
Well, it's so hard to know exactly, but like you've said, I mean, I've had the idea before I saw it in the data, so that's why my conviction is so high, because I couldn't find anyone to agree with me until like 2019. But now it's like the cheapest with the lowest risk profile if you believe the thesis that permissionless monetary markets are going to matter and network effects will continue to consolidate around it. But as far as rotation goes, there's so many things that can happen, right? Litecoin can break out against Bitcoin just because Bitcoin keeps going down and it has so much leverage and speculation pumped into it. And Litecoin holds up such that you start to see traders notice the relative strength. There's a lot of money already in this market that can rotate into Litecoin, right? If a lot of these meme coins that are really high, much more inflated, start falling, they notice Litecoin holding steady, they might just convert into that such that Litecoin rallies while these all fall. I mean, that's possible. It's also possible that because sentiment is so destroyed in Bitcoin and there's so much hate on Michael Saylor now, that we could see a V-shaped recovery. I kind of think that's most likely a quick rally over the next 3 months, since sentiment has been so destroyed, and since a lot of these other markets are still, going parabolic. I mean, gold and silver still on a parabolic trend. Equity is still holding up pretty well. Crypto could, in general, become popular again. That would most likely, if we saw that, create high Bitcoin fees again, which I think is the most bullish case for Litecoin because it's a 2x in transaction activity to equal Bitcoin's level of dominance. And if Litecoin broke out after a 9-year sideways trend where, like you said, everyone's already exited, it's like so hard for people to hold on to Litecoin now because it's underperformed despite the metrics being so high, that there's not that much liquidity there on the ask side, that it can break out and it can be pretty explosive, just like we saw with XRP or Zcash. But this would be a more durable trend, and that's why I described in the book, like those types of pumps with Zcash or XRP, they weren't building this fundamental divergence. They weren't challenging the most dominant narrative in the space, right? There's way more capital in Bitcoin and aligned with permissionless monetary markets than you get from some hype-driven rally from an XRP token or Zcash that has like almost no adoption. So
Fair
yeah,
on that.
I do think we're in an extreme pessimism. It's been extremely hard for people.
Cheers, brother.
Hard for all of us, and for me too. Like, yeah.
But you get things done during these periods. Clearly, you're proving that.
Yeah, I mean, they give me time. So in a way, I guess I have to look at that as a positive. Hopefully it's valuable to the community. I mean, I sacrificed, like I sold a lot of Litecoin that I could have just been doing what I was doing before, but I decided I wanted to try to contribute because the community needs it. And I think the world needs a different view, right? So hopefully it pays off in that way. That can help other people understand rather than getting sucked into the casino.
Honorable man. I want to look at 2 tweets because you reminded me of them in this past little bit of conversation. Then we'll get back to your book. But you mentioned something about recently that it feels like, so this is the first one of 2. It feels like February of 2017. That's the one point you can unpack. And the other one is, and I was looking for this, and you were responding to a Tony Severino comment. You said, with network activity near all-time highs, we've been discussing this, it's cheaper, Litecoin, now than it was at $1 in 2015.
Yeah. So the first one, wait, what did I say? For the first tweet?
You
It's
said it feels like February 2017.
Oh yeah. Well, I mean, there was no expectation of
That's for sure.
massive market move. It was a total surprise. You need that type of shock, potential for shock, to see that type of extreme move.
I mean, that
Um,
launched a 10-year campaign that we, like you said, the maximalism was born in that time.
yeah. So, I mean, almost no trader saw that, or I don't know any trader that has ever called. Like they get so much credibility in the cryptocurrency market because it's mainly been sentiment driven, and there's not a lot of underlying monetary growth to really affect prices. But uh, it's kind of sad to me to see the credibility all be given to them when there's no trader that called 2008-9 crisis. No trader called the Ethereum rally or the Bitcoin 2017 rally or the altcoin massive explosion. But they have all this credibility now. And I think because so many of them are bearish and psychology is bearish and nobody expects this. I don't expect like a broad alt season because there's so many coins. But I do think potentially Bitcoin can rally here based on macro uncertainty and that narrative coming back alive, and Litecoin has such huge potential. I always look at it from a first principles perspective. That's why the second tweet I said it's cheaper than $1, and it was at $1 in 2015. Almost no one in this space thinks about it that way because it hasn't mattered. But I know for sure it will matter. It is demand if these markets exit the casino or see higher demand levels. And I know those voices that they were popular in early Bitcoin days, right? Trace Mayer, there was no historical price action to really read technical charts. But he had a very fundamental understanding and a monetary, view on monetary history, and he had a huge position, did really well. Those are the types of people that are eventually respected, and the traders are forgotten about because they'll be right half the time and wrong half the time. They can't. It's impossible to see. The chart just shows you past history. It doesn't show you the future.
Yeah, regarding Trace and Andreas Antonopoulos, it seems like
Yeah.
the early space was marked by these kind of statesmen of Bitcoin almost. They were saying things that were correct, and they were proven right. And now everyone can sort of ride on their memories, sort of in vapor. But yeah, those were special times, and those were the people that were inspiring to listen to,
Yeah.
because they were saying everything that no one, because we weren't in institutions at that point, or even governments. I mean, again, it was like the Four Horsemen stuff, but they were saying it anyway, and that was so attractive, and that's what brought me to Bitcoin. It
Yeah.
was very libertarian in many ways, right?
Yeah. So it was exciting to me early on as well. And I think that ethos won't go away. I mean, the technology exists. It'll just pop up in new forms. And I think the Litecoin community actually more aligns with that than almost all the others. I think in Bitcoin, if BTC fails, the ethos and this open source technology will still exist, and it'll just re-pop up in different areas on different chains. But I think I'm confident in it given where we're at with Litecoin here, that maybe we can bring back that ethos, right?
It's not dead. The star has moved over the sea.
Yeah.
And
Exactly.
we shall see. So Act One, I think we kind of sort of wrapped that up there. It's a lot of scaffolding, which is important for the way you lay out your book. But scaffolding leads to sort of other concepts which we won't get into. But you unpack a whole lot in this book, and then even more in Act Two. Let's see here. I want to talk about. We'll hit two more sort of topics in the second act. That's about all we can do. But I liked what you talked about, language failing, which may have been designed. But you open the book's second section noting the problems with language. And you write, and this is a quote, vocabulary has stopped tracking reality. So tell us
Mhm.
about this.
I think that was in the first chapter of Act 2, so chapter 6. I was, in order to apply definitions, I wanted to explain why the vocabulary developed the way it did and why it persists today and why it's wrong, right? Diagnose why it came to be, how it exists, and why it's wrong before I give new definitions. But yeah, there's really two reasons that this language developed, right? Because one, we had enough history where you could now anchor Bitcoin price charts to observations and make positive correlations with things like M2, global money supply versus the Bitcoin chart, right? So there's a lot of correlations that are built around trying to map future price action, but they totally ignore the underlying drivers of price over the long term. And the second piece is like authority selection in a, narrative driven market. Because speculative capital dominates the cryptocurrency space and has for so long, it overwhelms the monetary demand side. It allows certain people to, be the public's like reference guide for what is reality. You kind of see this top down narration where people, center around the microphone or the people holding the microphone in macro markets, right? Everyone pays attention to what Jerome Powell says and what the Fed says. They have this authority over the market psychology. What they say almost matters more than what they actually do. And in those types of top down narrative driven markets, when you allow an authority figure to define what it is, you develop bad language that doesn't represent the underlying truth or the underlying reality, if that makes sense.
It reminds me of something. In the book, I think you said, imagine like, uh, what is it? Imagine a bull market in power grids where the most followed analysts can't explain the grid. And you're describing something here with Powell. I remember there was a time, and you might know this clip. It was back when Ron Paul was still in Congress and on the banking committee, when he talked to Fed chair at the time, Ben Bernanke, and he was grilling him. He's like, well, why doesn't the Fed hold diamonds? And he didn't even know. And he's like, well, why is it gold? He's like, well, because it's tradition. And then he's like, well, some of us still think it's money. So it's interesting to see these figureheads representing something, and they don't even know really the mechanism of what they're representing. So
For sure.
their language broke down. And in this section of the book, you talk about altcoins being alternate implementations of the Bitcoin code. Is anyone even trying to do that anymore?
Yeah, no, that's where the original definition originated. That's why you have altcoin, because there's Bitcoin and then altcoins. There were similar designs to Bitcoin. They're trying to do the same thing, just with experimenting with messing with different parameters.
Yeah.
But then it sort of grew to mean everything other than BTC, where it's like more of a social definition of BTC is the real money. Everything else is speculation. That's basically what the social definition is. But the reality is that because of that belief, there's so much more speculation in BTC versus a lot of what they would call altcoins. So the whole space is like vocabulary is socially defined. It's defined by this social layer because of so much speculation, and it will break as soon as this stuff starts to matter more. But yeah, and I talked about bull markets and power grids, right? It's similar to Bitcoin. The most trusted analysts, traders, they're all like macro people who carry around these models that are based on wrong assumptions about what the underlying technology does. And so like if you had a bull market in power grids and the most respected analysts were people like macro guys that tracked liquidity against power demand, but they didn't understand the actual system dynamics of power grids, right? If you saw a heat wave or something and the capacity of the system was strained, they expect, huge demand and increased profit margins, but the system can't handle it. They all immediately look stupid when that happens. And that's the same thing, or the best kind of example I could think of for if Bitcoin actually matters and people demand their money, say there's a credit crisis or something happens on the macro level, some shock, or suddenly people want demand for self-custody. Well, if there's 300 million people that have price exposure, but the chain can handle 500,000 transactions a day, you're going to see that sort of same exact thing happen. So yeah, I hope that makes it make sense to people by using those types of examples.
Chapter 9, the war over money. So you outline scenarios where permissionless monetary networks finally become necessary. Maybe they're optional now, they're luxuries now, they're hobbies. But tell us about this war over money. Explain what you outlined in that chapter.
Yeah, so I guess for context on that, first we live under a monetary monopoly. A lot of people don't think of the dollars they use or the fiat currency they use is under monopoly control, but that's what really it is. You have a monopoly over production, which means only a certain entity can produce new units of the money. Everyone else is banned from it, or else they go to jail if they're caught for counterfeit. Versus competition in the free market for money, so things like gold, Bitcoin, or other free market monies. If the monopoly is challenged because permissionless monetary demand expands, the state is going to lose tax revenue, right? The whole value proposition of Bitcoin is kind of anti-monopoly money. You adopt it because the cost of staying inside the existing monetary system you're in is too expensive. That's really what pushes people into it, whether it's expensive because they're censored or their transactions are delayed or blocked entirely, or just because inflation is so high that they're trying to exit it. They will adopt it for that reason. And the state's incentive is, if people are leaving permissionless monetary systems, it reduces their tax capacity, and they have compounding liabilities that are going vertical or like exponential, right? So people imagine Bitcoin kind of existing and coexisting inside the existing monopolized system, where its entire value proposition is to resist the taxation and censorship that exists inside of it. So I think if it becomes more important and monetary demand expands, the state will react, not all the same way across the world, but there's tools they can use to try to restrict that monetary market from growing. And they already kind of are doing that with trying to centralize people into regulated paths and KYC on every single platform, getting rid of the P2P Bitcoin exchanges so that they can more easily do chain analysis and track everyone, make sure they pay their taxes. So I'm trying to explain the conflict that's inevitable, that's so socially unpopular to say, and map the tools they will try to use to curtail monetary adoption. So it's a multi-step process there. If you want me to go through it, I can. But the first step is just to make it, use the political powers of writing new legislation to restrict the growth of the monetary market. But if the market really realizes that it's permissionless and privacy is good enough, they can just understand that maybe the cost of not following the rules is not as high, and they still use it anyway. And then if that persists, the state can try to attack it at the mining level. And the market can overcome that through paying higher fees to incentivize miners to confirm their transactions that the state is trying to block. But I just go map that conflict process. And people imagine that it's impossible, but I think now with the expansion of AI and a lot of this new technology that's becoming more popular, if institutions are unbundled and some solo person or small team can, kind of reproduce the institution that they already work in, but with far less capital or the huge institutional liability side of the balance sheet that they have, meaning they can outcompete these institutions. I think those types of solo operators or small teams dispersed around the world are the most likely to adopt cryptocurrency. The people that just sell information, right? It's hard to adopt crypto in a permissionless way if you're tied to a jurisdiction, or if you're like a typical brick and mortar store. The government can just come to you and shut you off. But if you're anonymous on the internet and you just sell information, and these macro stress or fracture points are happening in the existing system, your risk profile is very low, and the upside of adopting crypto might be extremely high. So these high value natively digital producers, I think, will drive growth for permissionless money. And then we'll see that conflict play out.
Tell us about the peaceful versus non-peaceful competition. I believe you described that. I saw that as maybe a Bitcoin and a Litecoin, if I'm remembering appropriately. Maybe I'm thinking of the noise phase.
Well,
kind of, you have the dominant, which sort of diminishes as the alt starts to ascend.
I was
getting that off.
Yeah, a little. As far as like peaceful versus, I think, when governments become so forced to tax at an extremely higher level, right? You see government liabilities compounding and exponentially increasing. Ray Dalio talks about this a lot.
Mm-hmm.
I mean, that's future costs that taxpayers are going to have to pay, even though they don't realize that. When those costs are realized, generally you get some type of like revolution where it is violent, because nobody wants to pay these huge bills. I mean, that's the primary reason why most wars end up being fought. But with cryptocurrency, if privacy is good enough and these new tools, people, utilizing AI to create a lot of value individually, I think it doesn't have to be violent, because if they can hide well enough, who are you? You can't decide where to shoot your bombs or send your military to go capture these people. So it can be more peaceful. Obviously, it'll be super disrupting if this type of world manifests over the next 5-10 years. But it doesn't have to be as violent. If these individuals are solving problems for the world and making the world a better place, the governments, if they can't maintain the monetary monopoly, I think just lose relevance over time, and new elites kind of emerge out of that direct society.
So the domestication we've been seeing, we've had different flavors of it with different administrations, some surprises, some maybe some other scenarios maybe not as surprising. It's interesting to sort of observe that, but that's while the state or states have power. So what would happen in this example? Because of course we're talking about Bitcoin as an alternative to the dollar, Litecoin as an alternative to Bitcoin and the dollar. What would it look like if, let's say, you had a currency collapse?
Yeah, I would. I mean, all of those historical instances of currency instability are extremely politically kind of crazy. I mean, emotional volatility would be extreme. You'd see capital controls, right? The government's first response would be to try to contain it. So increasing types of, I don't want to say authoritarian, but like extreme emergency type measures where they would try to protect the existing system.
Right.
And I guess on a high level, my book is trying to explain the reason why you'll see migration from the current dominant monetary monopoly to parallel systems, because of these stress and fracture points where the cost of staying inside the system is rising rapidly, and the tooling and technology is approaching zero over time because of the exponential decrease in cost of compute, bandwidth, storage. Privacy technology finally becomes more competitive with dominant mass surveilled technology. I think all those things converging together uh, will make this migration happen. And then on the parallel system side, you'll see the same thing, right? The cost of Bitcoin rising forces people into other things that do the same job at a lower cost profile. But yeah, I don't know. It's been so long that on the macro side, we've seen like people not even care anymore because it seems like they can kick the can down the road infinitely.
Yes.
But as soon as confidence breaks and psychology changes around that, I think it's over. And I think the same people, like the Bitcoin maxi is holding the microphone for so long, is similar to the central banks and politicians holding the microphone. I think people just stop listening over time. And we'll see new leaders emerge from this. But this is like a 10, 15-year process, I think. It could not happen too. I mean, if AI expands productivity so much and they're able to tax that excess production heavily and redistribute it successfully, then I think this type of conflict wouldn't arise, but I doubt. I think the odds are that we're going to see a lot of disruption.
Yeah, and more printing is coming. So, I mean, we're just stressing the monetary system that much further to keep things going. You can only kick the can so long.
Yeah, and I think the breaking point is when like everyone's trying to outrun the tax burden and the cost of living rising through speculation and investing. But at some point, the political risk becomes high, right? Governments start reaching in to redistribute wealth from people who gained from the speculation or investing and give it to the other people, right? We're seeing that political risk and like temperature in the room rise consistently every election cycle. I don't think it's going to go down. I think it just eventually results in, right, who knows what happens in 2028, a new president, and they just decide to start redistributing wealth more aggressively. Political risk rises, which means a lot of these financial asset prices that have been sustained and people have been putting their money in U.S. assets because they think it's safe. That whole mentality could change, or you realize your money isn't safe under a new central government that has a lot of financial problems.
Yeah. We covered a lot of ground.
Yeah.
Your book covers much more ground than we will cover here. And again, that's the point, folks. Follow Earn Not Gifted. Again, he's at Earn Not Gifted on X. Let me just get your links out here. earnnotgifted.medium.com is your blog. You're on YouTube, and your main site is earnnotgifted.com. So I'm going to grab a book for sure. And I will cherish the PDF I have of the advanced copy, though. But I'll definitely be getting a book. I would encourage everybody else to do the same. We've covered some things. What did you want to highlight before we end that maybe we didn't? Because again, I didn't read the entire book. What's your highlight in the piece that you're about to reveal to us?
Well, I think what's unique about this book is it's designed to orient people, and it builds a single logical causal chain from chapter 1 to chapter 31. So I wouldn't point at any one piece. I think that rather than telling you what to do and what to think, I'm trying to tell you how to think through this. You don't have to agree with me on Litecoin. You don't have to agree with me on the future ideas, but the book has points of invalidation and shows why I think the way that I do. And it asks you to challenge the assumptions and come up with your own ideas. So I'm less trying to preach out at you and tell you this is the way the world works, and more trying to get you to see the underlying mechanisms that will drive price long term, that matter, and see the world differently than all of the narratives that are being preached at you. So that's what I would say. And it's part of the larger system that I've created. My website's being revamped. I'm going to totally redo that over the next week. And then I hope to launch this full project with audiobook. Like it'll be a 24/7 stream. That's what I've been working towards. And I think it's unique, like combining a lot of layers and synthesizing ideas to try to compress the signal that I haven't ever seen before. So it should be interesting. Check it out when I do go live here in the next few weeks.
Absolutely. And again, links in the show notes, folks, where you can follow Earn Not Gifted. We will be watching closely. I appreciate your time coming on. It's been good having you back. And in the meantime, I'll be reading your posts, which we could have an entire other episode just discussing tweets, but that's it for today. So to all of our friends that follow the 84 Million podcast, thank you so much. Please subscribe to us wherever you find us. Give us a 5-star rating. Find us on YouTube. Hit the subscribe button. We do appreciate it. All the support that we've got. You can find this episode and every other episode at 84million.com/podcast. And Earned will be following. Thank you.
Awesome.